Welcome back, children. Welcome back to the paper that we started in the previous session. Whether you got together in the previous session, whether you worked with me in the previous video to do this paper, I don't know whether you were with me or not. I don't know actually, but it's better if you can go and watch the previous video where we started the paper from question number 1. In the previous video we started the paper from the beginning, right? So whether or not you got along with me, whether or not you got along, it doesn't make a difference, or does it? If you got along with me, you would have done the first 3 questions. Now we are starting this with the 4th question, so it makes a difference, right? Yes, I advise you to go and watch the previous video where we started the paper. This is Colombo Zone, Western Province. Wait, that's better. This is Western Province. Yeah. Western Province. 2016. Paper 2. All right. 2016 second term actually. 2016 second term. Second term, paper 2. (2016). All right. Second term, paper 2. Paper 2. All right. Paper 2. Question number 4. We are starting today with question number 4. That's right. Right? All right. We have what? We have a table, a large table, right? Well, this is the only question which is in the question number 4. Yeah, to tell you the truth, in the paper, this part is the only part. Let's say question number 4, Roman number 1, there is no Roman number 2. This is the only part in question number 4. Okay, we have this large table. Don't worry about it. Just go through the question and you will understand. Prepare the table indicating the similarities and differences. Similarities and differences, all right? We have to write similarities and then we have to write differences. Got it? In between what? Similarities in between? In between the types of business organizations given here. We have 1, 2, 3, 4, 5. Well, those are not business organizations, man. Those are not business organizations. I numbered something else, right? Let's see. The business organizations are given horizontally. Horizontally. We have 1. Wait. 1, 2, 3, and 4. 4 business organizations are given, children. Can you see them? Can you see them now? 4 business organizations are given here, right? We have sole proprietorships, partnerships, limited companies, and cooperatives. Cooperatives. Yeah, we talked how to pronounce this in lesson number 3. Business organizations. Cooperatives, that's how you pronounce it. Cooperatives. Okay. Then vertically, what do we have? We have some criteria. See, we have some criteria. We have ownership. Okay. What are the criterias? Number 1, ownership. All right. Ownership. What are they expecting us to do? They're expecting us to write the nature of ownership in sole proprietorships, in partnerships, in limited companies, and in cooperatives. They are asking us to write the nature of ownership. Got it? That's what we have to do. Nothing much, right? Nothing serious. Then, after you write the nature of ownership of a sole proprietor, then you can compare the ownership of a partnership. Is it similar or different? Yeah, that's what they ask us to do. Similarities and differences. You can compare and see what are the similarities and what are the differences among the types of business organizations under the following headings. These are the headings, okay? Yeah, these are the headings. 2, 3, 4, 5. 5 headings are given. 5 headings. Let's do it. Shall we? Let's do it. Tell me, similarities and differences. First of all, let's take the first heading. Ownership. When you consider ownership of a sole proprietorship, what is the nature? What is the nature of ownership of a sole proprietorship? Sole tradership. Yes, tell me, yes. That's right, children. Ownership is limited to one person. Or in other words, owners, when you consider owners, there's only one person or one owner. So you can write sole proprietorship. What is the nature of ownership? Owned by one owner. That's it. Simple as that. When you consider partnerships, what is the nature of ownership? Owned by how many owners can be there? 2 or more. 2 to 20 owners. 2 to 20 owners can be there. Now see the difference between sole proprietorships and partnerships. The difference between sole proprietorships and partnerships. Sole proprietorships are owned by one guy. There are no other owners. One man show. He runs the business. He takes the decisions. He uses his skills and his talents to run the business. He's the decision maker. He controls and manages everything. It's done by him. One owner. But in partnerships, there are more. There can be 2 or 20. That means more than two or more owners. When you consider limited liability companies, what can you say about the ownership? Why? No, you can't say unlimited number of owners. No. Unlimited? Who said unlimited? Well, children, it's like this. There are two types of companies. In your syllabus, according to your textbook, you have to know about two types of companies. What are the companies? The two types of companies? Yeah, okay. Now, now I'm getting the answers. Yeah, good. Private limited companies, public limited companies. Yeah. Most of you are saying the answer. Good. Private limited companies and public limited companies. Some students still think that public limited companies are in the public sector. No. Public limited companies are not categorized under public sector. Public sector means the government sector, the businesses which belong to the government. Private sector is the sector which is done by the private individuals or people, private people. Under this sector, private sector only, public limited companies are categorized. The difference is there are two types of companies. Okay, I'll just say limited companies. Okay, limited companies, are categorized or divided into two all right. Limited companies are divided into two. What are the two categories of limited companies? Tell me. Private limited and public limited. Private limited and public limited. Got it. Quick recap. Okay, quick recap. Private limited are known as PVT Ltd, private limited, the abbreviation, short form. Public limited are known as PLC, public limited companies, PLCs. All right. Well, there are public limited companies who don't use PLC, but most of the public limited companies use PLC. Let's put it that way. Okay, just remember it that way. There are two types of public limited companies. Like this also can be divided into two groups, listed and unlisted. Not in your syllabus, so don't worry about it. Right? So PLCs, public limited companies, use PLC. Okay, you remember it like that, in that manner. Public limited companies are PLCs. Private limited companies are PVT Ltd. Okay, PVT Ltd. Right? Good. Done. These companies are in the private sector. Okay, private sector. Private sector. Got it? Private limited can have 1 to 50. 1 to 50 can have 1 to 50 owners. Got it? But public limited companies can have 1 What? An unlimited number of owners. You got it? Now you remember, right? Private limited companies can have only 50. Maximum limit is 50. Okay, maximum only 50 members, owners, shareholders. Public limited companies, there is no maximum limit, can have any number of owners, shareholders. Okay, that's it. It's a quick recap about public and private companies. All right, that's it. That's about it. Then when you write your answer about limited liability companies, you have to say private limited, PVT Ltd. You have to say, you have to mention PVT Ltd, private limited, 1 to 50. Okay, public limited, PLC, can have unlimited shareholders. Got it? Right. Let's not make it so messy. Just write a private limited 1 to 50 owners, PLCs, unlimited owners. Right. Okay. And cooperatives. Voluntary independent membership, not owners. Cooperatives have members. Okay, how many members, or let's say owners, in this situation? They're asking for ownership now. Ownership, sole proprietorship 1 owner, partnership 2 to 20 owners, private limited 1 to 50, then cooperatives. How many owners? Again, can't say owners. Cooperatives have members, voluntary members. Okay, how many members should be there to start this thing, cooperative society? Minimum 10 members. 10 members should be there. 10 members. All right, or more. 10 or more. The maximum number is not specified. 10 or more. Got it? Just like a PLC, public limited, in a public limited company, the maximum number is not specified. Can be like unlimited number of owners can be there. Unlimited number of owners can be there. Unlimited. Okay, in a public limited company, PLC. Just like that, in a cooperative society, 10 members minimum, maximum is not specified. 10 members minimum, 10 members or more owners. Got it? Management. Then we have the next heading or the criteria, and that is management. What do you think about management of a sole proprietorship? There's nothing to think. Managed by the owner. Managed by owner most of the time. Okay, remember children, the owner can hire or take an employee like a manager for the business. Owner can take a manager to manage his business, but the decisions are taken by the owners, not owners, owner. Only one owner is there. Decision making is done by the owner. The manager, he implements the decisions taken by the owner. So managed by the owner, decision making is done by the owner. In a partnership, managed by let's not take too much space. Yeah, in a partnership, managed by partners, managed by the partners, okay. Collectively, collective decision making, collectively, managed by the partners collectively. Got it? Limited liability companies, who only one owner is there and he is managing the company, he makes the decisions, he does all the work. Is that the case? Limited liability companies? Are you kidding me? No, there's like a special feature in limited companies. There is a director board managed by the directors. It's a little difficult to keep my writing the letters, in a small space like this box. Managed by directors. Got it? Managed by the directors in a limited liability company. Be it a private limited, be it a public limited, it doesn't matter. There's a director. There should be a board of directors. Okay, at least one director. So managed by the directors. In a cooperative society, they are managed by the members. Cooperative societies are managed by the members voluntarily. Voluntarily. You got it? Like, there is no specific person that is having the responsibility to manage, and everybody else calls him sir. Yes sir, that's a good decision. No, there is no such thing in a cooperative. Cooperatives have voluntary independent members. Okay, the members voluntarily join the cooperative society and form these societies, and they are managed by, the societies are managed by the members voluntarily. Okay, that's it. We are moving on to the next heading, liability. What about liability in a sole proprietorship? Oh no, it's unlimited. Unlimited. What about the liability of a partnership? Yeah, what else? Unlimited. What about the liability of these beautiful organizations? I like companies, companies are more, they are more professionally organized to do business. Yeah, companies are more professionally organized to do business. Okay, companies have limited liability. Okay, limited liability. Yes. I'll just keep my handwriting small so I can fit into these boxes. Unlimited. Partnerships also having unlimited. Unlimited. Got it. But companies have limited liability. Limited. That's great. That's great. Limited liability. It's a great feature. I like it. Limited liability is a great feature. Limited. Come on. Liability. Okay. Limited liability. Limited liability. I hope you can see I'm trying to write as clear as possible. Okay. What about cooperative societies? Cooperative societies. Well, children, it's a little unclear, a bit unclear, even in your textbook. Under cooperative societies in lesson number 3, even in the textbook, it has not been given whether cooperative societies have a limited liability or legal personality. Okay. Even in your textbook, it is not given. But if a cooperative society is incorporated or registered, let's say in simple form, if a cooperative society is registered under the cooperative societies law, the law which relates to cooperative societies in Sri Lanka, the law is the Cooperative Societies Act number 5 of 1972. Okay, let's write it down somewhere here. Let's write it down. I'll write it somewhere here. The law which is the law concerning cooperative societies in Sri Lanka is the Cooperative Societies Act number 5 of 1972. Act number 5 of 1972. Right? I hope you can see this Act number 5 of 1972. According to this Act, children, only there is no mentioning or no provision about the legal personality of a cooperative society. Right? There is nothing mentioned about the legal personality of a cooperative society, not in your textbook, nowhere else. But just for the sake of remembering, when it is about liability, you can say if the cooperative society is registered or incorporated, the liability of members become limited. The liability becomes limited and it gets a legal personality. Yeah, let's keep it that way, just to make it short, or else we can't go in detail to the Cooperatives Act and Act number 5 of 1972 and the amendments in 1992. Or there are so many legal provisions. But just for you, my dear children, just for you, just to remember, you can write liability if if incorporated, there you go, more space, we need more space for this type of questions. If incorporated, if incorporated, limited liability, okay, limited liability, right? We'll move on right down to legal personality too. When it is about legal personality here, when we talk about legal personality of a cooperative society, there is no mentioning that the cooperative societies in Sri Lanka has separate legal entity, or in other words, there is no mentioning in your book that there is a legal personality for cooperative societies, right? Very, very simply, if I say a cooperative society is not a legal entity unless it is incorporated, right? Just like the above limited liability feature, we can say no, not a legal entity unless incorporated. Correct? Unless incorporated. If incorporated, there is a limited liability. If incorporated, there is a legal personality. In our lesson number 3, in our unit number 3, we discussed about limited liability and legal personality. We talked about these two features in a very descriptive manner. In that, children, I have explained to the core about limited liability and legal personality, about these two features. Okay, these two features are always connected with each other, right? Limited liability and legal personality, these two features are always connected. Got it? If there is no limited liability, if liability is unlimited, there is no legal personality. If the liability is unlimited, there is no legal personality. But if the liability is limited, yes, there is a legal personality. If incorporated liability gets limited, then there is a legal personality for cooperative societies. But if not, unless incorporated, there is no legal personality. Existence, no continuous existence, no continuity for sole proprietorships, no continuity. For partnerships, what do you think? No continuity. It will not continue. A partnership business will not continue to the future, right? A partnership business will not continue without the owners or without the partners. No continuity. Okay. But limited companies, yes. That's why I say I like these organizations, beautiful organizations, professionally organized organizations for just so suitable for businesses, right? There is a limited liability, and there is a legal personality, and there is a continuity. Yes, existence, continuous. Yes, it will exist continuously, can continue to do business even without the founding shareholders or the people who found the company. Even without them, the company will exist because there is a legal personality. Yeah, the company is a separate legal entity. Cooperative societies, without the members, no, because no legal personality. Got it? Children, fourth question is done. We can move on to the next question. Actually, we discussed a lot of things here, didn't we? Yes. Yes, we did. Yes. Yes, we did. A lot of information. Okay. Here we go. Next one. Fifth question. We are moving on to the accounting part. Yeah. Moving on to the accounting part. Now, children, we can see that in our business studies part, we did all three questions. Okay. The first question is the compulsory question. We did it in the previous session. Compulsory question, the question number 1. Then question number 2, 3 and 4. All three questions we did. All three questions we did in the business studies part. I did it because this fourth question is very informative. It's very resourceful. It will be useful for you. Yeah, this information in one table, everything is briefly but clearly included in one table in the fourth question. Yeah, that's important. So I did all three questions in the business studies part. Now we have the accounting part. This is the accounting part. Yeah, part 2, accounting. We'll select 2 questions, just like in the paper we are instructed to select 2 questions only. So 5th question and 6th question I'm going to do, because 7th question, when we go to the 7th question, you will understand it's a little too easy. It's about recording double entries in the ledger. So let's get on with it. 5th question, number 5. Following are some items of Pushpa's business who carries out a flora business. Following are some items of Pushpa's business. Pushpa, Pushpa is carrying out a Pushpa business. It's flora. Flowers, fresh flowers. Okay. Telephone charges, mortgage loan, bank loan, sales, motor vehicle maintenance, capital, received commission income, creditors, machineries, debtors. Following are some items of Pushpa's business. So Pushpa is a florist, isn't it? Pushpa. Beautiful. Pushpa. Pushpa's business. Pushpa is a florist. Okay. Right, there you go. Pushpa is a florist. So this is Pushpa's business. And we have been given some items from the ledger of Pushpa. Okay. These are the items. What are the items? Telephone charges, okay. Mortgage loan, okay. Bank loan, okay. Sales, okay. Motor vehicle maintenance, okay. Capital, all right. Received commission, received income. Creditors, machineries, and debtors. What are we required to do? What are we required to do? Required. Required. We are required to, using a tabular format, categorize each of the above items under the columns of assets, liabilities, equity, and income. They're asking us to prepare a table. Let's prepare a table. All right. No worries. But a tabular format means, children, a table. Okay. Tabular format means table. But what type of a table are they expecting us to prepare? Tabular format means preparing a table to categorize given items under what columns? These columns. Under these columns. Assets, liabilities, equity. Assets, liabilities, equity, income, and expenses. 5 columns should be there. And we have to categorize these items. All right. Okay, let's do it. No problem. No problem. A table with 5 columns. A table with 5 columns. Here we go. This is the table. And columns. This column is for the items. And 1, 2, 3, 4, 5. We have 5 columns. And a header row. 1 row for headers. Let's put the headers. Item. This column is for items. This is the assets column. This is the liabilities column. Capital column. Income and expenses. Got it? That's what they're asking us to do. Income and expenses. Right. Now, we have to write down our items, right? We have to write down the items. And it's going to take so much time because how many items are there? Let's number them. Shall we? Let's number them. Number 1. Well, it'll be a little unclear if we number them and if you don't write the items. Let's write the items. Telephone charges, mortgage loan, bank loan, sales. 4 items I'm going to write. Telephone charges, mortgage loan, bank loan, sales. How many items did we write? 4. What else is there? Mortgage loan, bank loan, sales. Motor vehicle maintenance, capital. Motor vehicle maintenance. Then capital. Yeah. How many more? Received income, received commission. Commission means income. Received commission, creditors, machinery, debtors. Okay, let's write down. Received income. Received, what was that? Received commission, yeah. Received commission income. Commission. Oh no, we'll need more space, yeah. Received commission. Creditors, machineries, debtors. Creditors, machineries, and debtors. Extend the lines, okay. Here you go, the lines. And let's draw horizontal lines just to separate the items. 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 10 items. Let's tick it and go. Let's tick them. Tick off these items just to mention what, under which heading or to which category they belong. Pushpa's business carries out a flora business. These items are given using a tabular format. Categorize each above items under assets, liabilities, equity, and blah blah blah. Going. Telephone charges. Under which category should you categorize? I mean, to which category does it belong? Telephone charges account. Let's say it's a ledger account. Telephone charges. Capital. No, it's an expense account. Telephone charges is an expense. Got it? Mortgage loan. Number 2, mortgage loan. Assets? A loan is an asset? No, a loan is a liability. A loan is a liability. Of course. Of course. Bank loan. Another loan. Liability. Sales. Is it an asset? No. Okay. Tell me then, what is sales to a business? Sales, if sales happen, we sell goods and we sell goods to customers. Sell. Receive the cash, the money. Money comes in. More we sell, more income we get. So sales, income. Motor vehicle maintenance. Motor vehicle maintenance. Asset? No. Motor vehicle account is an asset. Motor vehicle maintenance is an expense. Capital account, of course, seriously, you can't mistake that. Capital account or equity should be under capital category. Received commission. When I wrote this item, I was like, received income received. Received commission is an income. Received commission is an income. Income. Creditors. What? Liability, that's right. Creditors is a liability item or liability account. Machines. Machinery is in the business, in the factory, that belongs to our business. Machineries. Assets. Debtors are what? Liabilities. Debtors. All right, right. Debtors are liabilities. That's correct. Debtors are liabilities. No, debtors are not liabilities, children. Some of the time I have noticed that some students do this mistake. When we sell goods on credit to our customers without, no, they are not paying for the goods, without taking money, we sell goods to our customers, then those customers are owing money to us. Those are debtors. Those customers are considered as debtors, and debtors are assets to our business. Of course, debtors, assets, yeah, we call them trade. We sometimes call them trade receivables. Receivables, okay, trade receivables, assets. There you go, done. We are going to the next question, second part. The following information are extracted from Chalmers business. Assets, we have building, cash, stock. All right. Liabilities, we have creditors and bank loan. They are asking us to calculate the capital of the business. Is that so hard? Is that so hard to do? Calculating the capital of the business when assets and liabilities are given? Simple. Dimple. Simple. Very simple. Okay. What is the equation? We have to use an equation. What is the equation that we can use to calculate capital or to find capital? Is it A equals C plus L? Assets equals capital plus liabilities? Well, you can use that, but the proper one is, the version of this equation that we can use here to this question is the version of the equation that we can use for this question is C equals A minus L. You know what? C stands for what? C stands for what? Capital. Equals assets. Oh, my L has gone. It has gone. I don't know where it went. Assets minus liabilities. Assets minus liabilities. This is the equation, right? Right. This is the equation. Yeah. Easy. Yeah, easy, right? So, what is capital in this business? We don't know, but we have assets and we have liabilities. We can subtract the liabilities from assets and capital is there. Capital can be taken. How much of assets are there? 500,000. See, they have given under assets heading. It's too easy. Just add the assets. Building, not building. This is cash, 175,000. Then we have stock, 200,000. Just add the numbers, add the values. How much? Add it and see. Minus liabilities. What are the liabilities we have? Here, We have liabilities here. Creditors 40,000. We have liabilities, creditors. Under liabilities we have creditors 40,000. Bank loan 150,000. Then take the addition. How much of assets do we have? Did you add? Give me the addition. 500 plus 200, it's 700 and 875,000 minus subtract 190,000. You get your capital. How much is your capital now? Do the math. Okay. Yeah, these are such easy questions, children. It's such an easy question. Yeah. 875 minus 190 and you get your capital. Capital right here. Got it? Good. Next question. Third part. Owner invested 550,000 additional capital, paid bank loan, cash on sales, paid 40,000 creditors, sold goods, which, okay. Enter the above information with the opening balances to the accounting equation. Okay. All right. We have to enter the above information. This information 1, 2, 3, 4, 5 with the opening balances to the accounting equation. Where are the opening balances? Wait, let me check. Opening balances. Well, I don't see any opening balances. Are there any opening balances? Well, the fifth question starts from here. This is the fifth question starting here. Okay. Part 1 is done. We did this part. This is done. This is done. Yeah. Next part. Yeah. This is the answer, children. This is the answer for part 1. Part 1 answer. Next part, part 2. Did that too. We did that too. Yeah. You just have to take the answer, and the answer is 875 minus 190 is capital. This is part 3 now. Okay, this is part 3. They are asking us to enter the above information with the opening balances, but there are no opening balances given. Yeah. Right, let's just enter this information under the accounting equation. Okay. Right. Accounting equation. Let's write the basic accounting equation, shall we? Assets equals capital or equity. Capital or equity plus liabilities. Assets equals capital plus liabilities. That's the basic accounting equation. Children, there is no way that you forget this. There is no way to forget this. Okay. Now, first question or first item. It says 4th of January, 4th first. Owner invested 50,000 additional capital. 4th. 4th. Owner invested 50,000 as additional capital. We get money to our business. No doubt about that. We get money to our business, 50,000, and assets under assets, cash, we get cash. So cash increases, 50,000. Cash increases 50,000. Cash increases 50,000. We get cash. From whom do we get cash? Owner is investing. So owner's money, owner's investments are always, they always go under capital. So capital also increases, or equity also increases. Owner's equity 50,000. That's what you have to realize. All right, next transaction is done on 4th second. Oh, 4th month, children. It's the 4th month, right? So 4th first, April 1st, 4th second, April 2nd. This is the month of the new year, huh? January, February, March, April. April, the new year month for the Sinhalese and Hindus. Got it? 2nd of April, paid bank loan. That means we have taken a bank loan. We have taken a bank loan and we are paying it. Paying means money goes out, cash decreases. Under assets, cash decreases. How much? Cash decreases. How much? Paid bank loan 50,000. So again 50,000 decreases. 50,000 decreases because we paid. Paid means money goes out. Money goes out. At the same time, there should be a double entry, dual impact. When we pay the bank loan, money goes out. That is true. Okay. But the liability of the loan also decreases. We had a big liability, a bank loan. We paid 50,000 for it. Our money was, paid to settle the bank loan. That means the liability of the loan too has decreased. Liability of the loan. The loan liability has decreased. Got it? Right. Second, done. Third, wait. We'll separate them. So nice and neat and tidy. 4th, April 15th, right? 13th. So right, 13th. April 13th, this one. Yeah, this one. Cash on sales, 75,000. We have received cash. Why? Because selling goods to customers. We have sold goods to customers. Here you go, madam. That is 995. Getting cash. cash coming in. So because of selling goods. So cash increases because we get more money now after selling. Cash on sale 75,000. Cash increases and assets increases cash 75,000. At the same time, goods go out. Goods of the business is sold. At the same time, goods decrease. Goods decrease. Yeah. Okay. We'll take it up furthermore, and we have 1 and 2 transactions remaining. Done with the paper afterwards. 4th month 24. This April 24. April 24. Yeah. April 24, children. Paid 40,000 to creditors. 40,000 paid to creditors. Again, money, cash goes out. So minus 40,000, that is cash. Yeah, minus 40,000, that is cash. Minus 40,000 cash. Cash. Minus 40,000 cash. Yeah, because when we pay, money goes out, money decreases, assets decreases. Got it? Cash. At the same time, paid 40,000 to creditors. No, creditors are liabilities. Liabilities too decrease because of paying them and settling their debts. Liability, under liabilities 40,000, creditors decrease. Creditors decrease. Finally, down to the last one. Sold goods. Sold goods, yeah. This is the last one. Sold goods which cost 80,000 at rupees 100,000. Wow, that is a profitable transaction. Sold goods which costed 80,000, 400,000, which is a profit. The goods were bought or purchased. Goods were purchased, okay, at 80,000. But then when they were sold, the goods were sold for 100,000. What is the profit? Profit is 20. Profit goes to the owner. Yeah, profit belongs to the owner. So doing this for the last time, last transaction, on 4th, 25th of April, on 25th, 4th, sold goods which cost 80,000 at 100,000. Goods go up, goods decrease. Under assets, goods decrease. How much of goods decrease? I'm going to take this to the middle of the screen so it's easy for you. How much of goods decrease? 80,000 of goods decrease. 80,000 of goods decrease. 80,000 of goods. How much of cash do you get? How much of cash do you get? Sold goods which were 80,000 in value, 400,000. So 100,000 cash you get. 100,000 cash you get. Then what you must do is, you must realize that 100,000 cash is received, so cash increase 100,000. The profit belongs to the owner. So children, in this transaction there are 3 entries, not a dual impact, a little more than that. 3 entries are there. Yeah, that entry is what? The third entry. Profit of 20,000. The profit of 20,000. It goes to the owner. 20,000 increase. That is profit. There you go. Children, this is a simple question, not a very difficult question. All right, I'm telling you because these are given from the very beginning of your syllabus. Grade 10 accounting equation. Oh, no, accounting part, the very first lessons. No, the basic stuff. So if I'm showing this to you, I can show it to you in this manner. Yeah, recording the above information, the transactions under the accounting equation, the effect of the transactions likewise. Right, so we did the 5th question and 6th question. The 5th question, yeah. Yeah, and we completed the business studies part of the paper. Accounting part, 5th question is done. Mm-hmm. 5th question, all 3 parts. Yeah. The session has come to an end. I hope you revised all the things which we have done earlier. The syllabus at the beginning, the very beginning of the syllabus, those content was retouched, and I'm sure that you will find this stuff useful, because in the paper you could get such a question. This is Colombo Zone, Western Province Colombo Zone paper of 2016. Second term, Western Province Colombo Zone paper of 2016, second term. We started with the paper 2. Okay, we're going to finish it in the next session, the accounting part, and we'll take on the MCQ paper, the first paper. All right, until then, be good, do your work. As I always say, when you work, you work. When you play, you play. So work hard and play harder. Thank you. See you soon.